from U.S. corn, a decision that is reshaping international trade dynamics and stirring the agricultural markets. Join us as we unpack the compelling reasons behind China's significant cutback in U.S. corn imports, which dropped by 27.3% in 2022, and explore how this shift is part of a larger effort to enhance domestic supply chains and mitigate geopolitical risks. Discover how Brazil has emerged as a key player, potentially overtaking the U.S. as a leading corn exporter due to its increased trade with China. But what does this mean for U.S. farmers who are already grappling with trade disputes and market shifts? And looking forward, how does China's drive towards agricultural self-sufficiency through advanced farming techniques shape the future of global food security? We'll cover all this and more, providing a comprehensive view of the evolving landscape of international agriculture. Stay tuned as we explore these topics, delivering insights that could influence market strategies and national policies. Reduction in U.S. corn imports. In 2022, China's imports of U.S. corn decreased by 27.3% year-on-year to 20.62 million tons, reflecting a broader strategy to reduce reliance on American agricultural products amidst growing geopolitical tensions and domestic supply chain strengthening efforts. Despite this decline, the U.S. remained China's largest agricultural export market in the financial year of 2022, with corn exports exceeding $4.8 billion. China has also been increasing imports from Brazil as part of its strategy to diversify its supply sources and enhance food security. For 2023, despite some increases in purchases early in the year, analysts anticipate a slowdown in China's U.S. corn imports in the later months due to high international prices and the availability of more competitively priced alternatives. As for 2024, the outlook depends on the new U.S. corn crops prices and trading conditions. But with ongoing efforts to diversify supply sources, such as increased imports from Brazil, a continued decrease in reliance on U.S. corn seems likely. China's decision to reduce imports of U.S. corn has had significant economic implications. By opting for cheaper Brazilian corn, China canceled U.S. corn purchases totaling 832,000 tons, which pressured U.S. corn futures and highlighted Brazil's competitive pricing, about $30 per ton cheaper. This shift not only affects the immediate market dynamics, but also impacts U.S. farmers by reducing their export opportunities, potentially leading to an oversupply within the U.S. and lower domestic corn prices. The long-term effects could include a need for U.S. agriculture to find alternative markets or to adjust production strategies to cope with decreased demand from China. Before we continue further, we're eager to hear actively diversified its corn imports, significantly boosting its trade with Brazil. The initial shipments began early in the year, with expectations that China will purchase around 5 million metric tons (MT) of corn from Brazil throughout 2023. This is part of a broader strategy by China to reduce its dependency on U.S. corn imports amid geopolitical tensions and supply disruptions from other major providers like Ukraine. Brazil is poised to expand its role in the global corn market dramatically. It's projected that Brazil could export between 40 to 50 million MT of corn in the 2022-23 marketing year, bolstered by a new trade agreement with China. This substantial increase in Brazilian corn exports is facilitated by China's decision to approve over 130 Brazilian facilities for corn export, aimed at replacing some of the supplies previously imported from the U.S. and Ukraine. In 2024, China's approach to corn imports is increasingly focused on diversification, with a significant portion of its supply likely to come from Brazil and other nations like Argentina. Brazil's role as a major supplier is solidifying, with projections indicating it could supply a substantial amount of China's corn imports. The expected volume could significantly impact global trade dynamics, positioning Brazil to potentially rival or surpass the U.S. in corn exports. China's reliance on Brazilian corn has grown as it seeks to minimize its dependence on U.S. imports amidst geopolitical strains. This shift is underscored by China's strategic partnerships and trade agreements with Brazil, which have been strengthened to ensure a steady supply of this essential agricultural product. Brazil's competitive pricing and favorable agricultural conditions, which predict a robust harvest, further support this trend. The decline in Chinese purchases of U.S. corn could lead to a significant economic impact on U.S. farmers, especially given existing trade disputes with other major corn buyers like Mexico. Here are some key figures and projections. China's shift to cheaper Brazilian corn imports has led to a notable decrease in U.S. corn exports. In 2023, China canceled substantial quantities of U.S. corn purchases, affecting futures prices and highlighting increased competition from Brazil, which offers corn approximately $30 per ton cheaper. The reduction in exports to China has compounded the challenges U.S. farmers already face due to trade tensions with Mexico over genetically modified corn. These disputes risk further shrinking the export market for U.S. corn, potentially leaving U.S. farmers to face lower prices and higher stock levels. The shift in China's import preferences not only affects direct corn sales, but also influences broader agricultural economics in the U.S.